Well, good afternoon. Welcome once again. It's Joe with you here on the 2nd of April, Tuesday. Let's get into the markets. I've got my 2 cents. I've got some trades to share. You guys know the drill. Let's jump into it. I'm going to take a look at the meaningful news of the day, take a look at the markets themselves on a technical basis, and as always, let's share some trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into our market analysis, you will see that we had another kind of an inside day. Showed a little bit of weakness at the beginning there. We've actually got a gap. I'll show you these charts, but it's not as ominous as one might expect because we are at these highs. Take a look at the daily news. Continued strength in economic reports I think it's starting to get slow, this bullish sentiment or the move. But we are seeing these economic numbers reduce the chances of a Fed intervention. It's not a bearish thing at all, but it is showing that, hey, you know what? We're too strong to actually cut, which actually kind of curbs the markets from getting a little bit more exuberant. Let's get into it a little deeper. How do we finish today? About 1%. Dow down exactly 1%. S&P and the Q's down right around that area. The Russell down almost 2%. Oil and gold, however, had a pretty significant move to the upside. And I want to address this, and I'll show it to you because it's not very... It's interesting, but it's not panic-inducing. We have seen a pretty steady move into defensive sectors. This isn't a cause for panic. Let's go over to the advanced decline line. It's just an idea of, hey, let's pull out of something that's been outperforming and go to something that might be a little defensive if the markets decide to correct. It's not bearish. It's just a move to defensive side out of things that have been outperforming. 72% declining. 24% advancing, just a nice general overall sell-off above below the 50-day moving average. 59 still above, 41% below, not that big of a deal, kind of a sideways day. So let's jump into our first chart. This is the S&P. And what I want to make note of, folks, is when you get to this level here, let me go ahead and draw my box. This is where we're at. But let me go ahead and draw a line to show you where we came from. This charge from the beginning of 2024, and you could see it. I don't even really need to draw this line. Take a look at the 20 and the 50-day moving averages. This thing rarely tested. And even today with a gap down, hasn't even come close to the 20-day moving average. That's 20 trading days. Now, nothing lasts forever, right, folks? But it doesn't mean it needs to end in an absolute crash. So where we're at is a little bit of reluctancy from an exuberantly, or I should say an aggressive bullish market to something a little bit more reserve. I'm going to go ahead and put my box up here. We are still above that, what do you want to call it, 5180 on the S&P. I know that you guys got your own line here, but we're still in this area. I do expect it to stay choppy. I do expect the volatility to be high. I expect the markets to gap up, trade down, gap down, trade higher. It's just we have a little bit of skittishness at this high. It's not bearish. It's not. So for you bears out there, make sure you understand that this is just a slowdown or a hesitation. This move that I've seen into energy and materials and some of the defensive stuff, where that puts us as far as a chart itself, we are still in a very strong area above that 51.8 level, and we're just kind of consolidating up there. This is in no means bearish at all. Here's the Qs, same idea. Just a little bit more playing with where it's been. I'm going to go ahead and drop this right around the 437.50 area. I could go a little lower to the 435. Sorry, folks, this is the Qs itself, not the NASDAQ, but it does carry over pretty close. But it's still chopping around. This is something that has beaten highs. It's sustaining lows. It's super bullish. It's sideways to up. This is a +1, +2 at least. We are still in a very bullish situation. Moving over to our heat map, you can see everything just kind of took a break, a little bit of a pullback. We've seen this before. These are the sectors that I've been following very closely. Basic materials really didn't do much today, and the utilities, but look at energy. And if you guys pull those up, you will see A lot of stocks coming off the bottom, specifically over the last month or so. I'd say the beginning or the middle of March up until seriously today, there's a lot of stocks that have really raced off the top. And it's just a defensive move, skittishness at the top, but there is opportunity there for bullish plays. Then this might be a good place to go hunting. Past that, guys, I don't look much deeper than just kind of a reaction to a little worry at the top here. Overall, my market outlook has not changed, and you guys can see it's really difficult to change my market outlook when I have this area here. We are above a pretty strong resistance and had a massive move since the beginning of 2004, breaking records, setting highs, and we're just kind of consolidating around there. Nothing fundamentally has changed. Nothing economically has changed. This market is still super strong. This economy is still super strong. We're just seeing a little bit of hesitation based on maybe some doubt or some worries that the Fed isn't going to do what the markets expected them to do, and nor should they, in my opinion. But I have a zero here. It's kept me from doing anything super bearish or counter trend. It's also kept me from doing anything that's exuberant to the upside. Now, there are +2, +3 trades out there, and folks, they are in the materials and the energy sectors. So I'm just going to keep where I'm at. I went that +3 down to a +2 for the monthly outlook, and it's just because I think we're just going to base here. The longer we base, the more strength we can build, and I could easily go back up to a +3 on that monthly outlook with a sustained base here. So let's take a look at some of the trades I'm talking about. Not a lot. I'm going to give you one or two. My lists are still pretty good. The stuff I've been sharing with for a while has been working. However, I did want to make mention of a couple of things. I've got AU, I got gold, and I got VLO. This is Valero. Valero, I'm not going to show you. It's just setting new highs. It broke out. Take a look at XOM. Take a look at CVX, Chevron, ExxonMobil. All of these larger, bigger oil companies, energies have really been breaking out of high bases, breaking out of resistance areas. We just a big, massive surge in energy. So shorter term stuff, it might be there. But what I liked AU for was it's just a little cheaper stock and it hasn't yet broke out. Meta's been on the sideways for quite a bit, and Tesla actually has been on my bear list for a while, and it actually kind of rolled over. Tesla's a tough one to trade, folks, because it does gap, and it is in the news a lot, but it continues to follow along with its bearish pattern. So let's just dump straight into AU. You'll see what I liked about this is this little, the move that it's had off of the bottom, the crossover that we had back in, I'd say the end of February, early March, when everything else started to move to a defensive play. And understand, folks, this also could have a lot to do with the expectations of the interest rates staying where they are, which means it weakens the dollar, and so people go back to gold. I like the ascending triangle pattern here. This is a little bit preemptive. It's a $23 stock. It's early yet. I know it hasn't really participated, so I kind of question that maybe it's not as strong as some of the others out there. But I do like where it's at, and I think if this trend continues, this could be an opportunity if you guys want to get long to the upside in gold. Let's move over to our sideways stock. Again, this is Meta. Meta is just kind of hanging in there. Now, one thing that you could take with this and all of this sector, understand the communications tech sector has been an outperformer for a long, long time. Now, what's interesting about it, it's getting, I'm going to use the word tired. It's getting tired. I'm seeing a lot of money come out of it. Our darlings, NVIDIA, and all these things that have been outperforming for quite a while, they're actually getting a little tired, and there's a bunch of profit in here. So that's a huge range here. Let me get a little tighter to be more realistic for what I want to trade. There we go. The 480, 510, 515 level would be more realistic. I do like the fact that it's hit this a couple of times and bounced off of it today. It's a wide range. It's been a pretty good sideways, but the sector itself, it's sustaining. It's not falling apart. It is in no way weak or bearish. It's just, it's not as aggressive and strong as it used to be. Maybe some of that money is actually going into those some of those defensive sectors as of late. But it is a pretty good opportunity for something sideways if that's what you're looking for. That moves us over to the bear, and this is Tesla. It's been our bear watch for a while. This just continues to float lower, and float might be the wrong word because it is Meta and it does gap quite a bit. You could see just kind of where my cursor is here. We gapped up towards the end of April, and then it rolled back over, gapped down this morning. This could be a pretty good play because it has been consistently lower. And the amount of moves that it does have, there is some pretty good chunks of change to be made in the options world, especially with something this volatile. So that's about it. With a strong economy comes less chance of rate cuts or the amount of rate cuts. We've been seeing a steady move into defensive stocks and sectors since March. The economy is super strong, which, folks, that's a good thing. It's a good thing for us. Maybe not so much for the markets that anticipated a little bit more. However, to pull money out of something that was great and cash it and go into something that could be defensive or coming off the bottom is just normal. So I do not want my bears to think this is the end of the world, and I do want my bears or bulls to think this is the end of the run. It's none of that. We're just seeing a little bit of a hesitation here, and let's just keep it there for now. So remember, the bullish trend is still intact along with bullish sentiment. It's there. It's just taking a pause. We got some people pulling some money out and putting it into some of the bottom areas or some of the defensive stuff with worries and anticipation. We're human. That's what we do. But in no way has this trend broken. In no way has this economy failed. In no way is this weak enough for us to actually flip around. It'll be obvious when it does, and we'll jump on it when that happens. ADP employment tomorrow, ISM services, and Powell speaks. I think there'll be a lot of people listening to what he says. When it comes to a dovish or hawkish outlook, I imagine he's going to be a little bit more dovish. I don't think he's too concerned about the economy getting weak. I actually understand that's going to instill strength overall, and we'll just see how the markets react to it. We're going to see ADP employment, ISM services, and check potential trades for earnings as always, folks. And remember, we just follow sentiment and trade the markets in front of us. Thanks for joining me, folks, and we'll talk to you later. Bye, everybody.